I am Troy McGuire, co-founder of FinTech TV, and Taking Stock starts now.
2 minutes to the close here on Wall Street. We are looking at several of the major market indexes expected to close the tail of the tape at session lows. Let's bring in the Einstein of Wall Street, Peter Tuchman, for his take on today's tape and how this sets us up into tomorrow morning, Peter. Take on the tape, you like that?
Yeah, I do. I like that.
There you go. What are you seeing, and how does this set us up for tomorrow?
Look, tomorrow's is a Friday. We're setting ourselves up for a weekend, and problem about when you're having a weekend in the middle of war, that anything can happen. They're going to start analyzing what happened this week. Today was one of those days where all the chatter about the war was down, and this was basically a massive rally in oil versus a sell-off in equities. That happened twice this week, where we weren't engaging the war part of it. We were just engaging the commodity trade versus equities, right? And that's an old inverse relationship there. We also are setting ourselves up for a weekend. It feels to me if we close on the session lows today, we probably will gap down tomorrow morning. Maybe we'll get some capitulation and we'll blow out everybody at at these levels, because look, you're starting to get fear in the market, and you're starting to see that this is lasting a little bit longer than people expected. At least they had been promised. We've had a week of so much mixed, like fake news. I hate to use that term, fake news, but we're getting so many tweets that are coming that are erroneous on all counts. So the market feels fragile, and people are not getting a clear message.
A lot of mixed messaging out of the White House. Peter Tuchman, the Take on the Tape with Tuchman, a new segment. We'll bring it back next week. Thank you for being here. We'll pick up the broadcast for Taking Stock after the close. Time now for the bell. And there you have it, the team from Vulcan Materials, ticker symbol VMC here at the NYSE, bringing about a close to today's trading action. And man, oh man, what a day it has been. The S&P 500 will sell off 1.5%, the Dow down 1.5%, the NYSE Composite Index down 1.6%, and the small caps, as to be expected, the Russell 2000, the hardest hit among the major market indexes, down 2%. Energy and utilities, those are your only sectors in the S&P 500 in positive territory. The other 9 are down, those losses down, led by industrials, tech, as well as discretionary. Chevron, Salesforce, and Walmart, those are in fact your 3 strongest performers in the Dow. Dow laggards, Boeing, Goldman, and 3M. Let's bring in our good pal, Eric Criscolo. He is a market strategist right here at the New York Stock Exchange. So Eric, we were just talking about with Peter Tuchman the fact that we're finishing right at session lows. We know sometimes, not always, that can portend a gap down into tomorrow morning's open. But of course, we got a PCE print that we'll have to digest before we get the opening bell tomorrow. What'd you make of today's price action, Eric?
Yeah, it's kind of ugly, to put it nicely, I guess. Listen, we've been accustomed to buying the dip for a while now, right? Every time the S&P 500 tags the 100-day moving average, going back over a year, every time that dip has been bought, we rally higher. On Friday, we closed below the 100-day moving average, and now the question is, are buyers going to come in to buy those dips? It's not like we're way off. The S&P's down a little over 1% today. On the week it's down a little bit. So it's not like we're in the territory we were in with the tariffs in April, last April. But kind of like market's kind of feeling a little uneasy right now. And oil prices constantly are going higher. That is really, really weighing on the markets right now. And I think just the fact that this Iran situation is prolonging or extending beyond what anyone initially thought, that's really weighing on the market right now.
I mean, right now we got West Texas is priced at 96.51. Brent, that's the global benchmark, north of 100. It had been the tail of the tape for yesterday, which saw crude oil prices go up and stocks come down. Seems as if that's been the continuing story for today. Is that kind of your expectation for at least the foreseeable future? We know the White House is putting a timeline, they say 4 to 5 weeks on this thing. Investors may not be quite so confident with that timeline.
Well, yeah, I mean, the last time when we bombed Iran last year, that was in and out. It was a day, a couple of days, right. It was over. And that's not this time, right? The other thing, too, is the Strait of Hormuz is closed, basically. And now it's okay for the U.S. a little bit because we are energy independent. We produce our own oil, natural gas. Europe, Japan, the Asian countries, they're going to get hit really hard. And you're seeing that in the dollar, why the dollar is reacting so strongly right now. Is that those countries, the yen, the Swiss franc, those haven currencies, usually we get bid in these volatile times. But the energy price inflation that they are potentially going to see, those currencies, that's kind of weighing everything down versus the dollar. So the dollar's moving higher, which is making it even harder for these countries now to go against a stronger dollar. So there's just a lot of macro currents kind of converging right now, and it's really being seen across asset classes.
I mean, it's been a while since we've looked up and seen the Dixie trading with a 99 handle. Yeah. I mean, we're kind of in the long term, we are accustomed to seeing it north of 100, but the big storyline through the first year of the Trump administration have been the dollar falling 5%, 7%, down to 10% and more. Now to have it at 99.74 speaks to maybe a bit of that adjusted concern. Speaking of concern, CME Group FedWatch tool, I couldn't believe it. I was shocked an hour ago to see the expectation now for no interest rate cuts on the table. Obviously, that moves a lot. It could be 0, it could be 1, it could be 2. But for right now, market participants are saying, hey, we're standing pat the rest of 2026.
Yeah, I mean, that's oil right there. You're going over 100. We had about 2 rate cuts priced in, last month, even going into the early part of this month. That has been taken out. Just like you said, we're less than one rate cut now priced into the market. So we saw that the 2-year yield today jumped over 10 basis points. At least before I came down here, it was up over 10 basis points. So the front end of the curve is just ripping higher. The entire curve is shifting up, but the front end is really coming up. That's kind of flattening the curve overall. So it's everything is kind of moving quickly right now across assets.
Yeah, of course. Before I let you go, any expectation for what we may see out of the PCE inflation print tomorrow? Like we get CPI, we get PPI. This is the big one. We always say this is the Fed's preferred gauge of inflation, in particular core PCE tomorrow morning, Eric.
Yeah, so CPI was pretty tame. It was kind of on the screws as far as consensus goes. Looking into the details, it looks like some of the stuff that goes into the PCE versus the CPI was maybe a little hotter. So the PCE could come in a little hotter than the CPI, and that's going to, probably be a talking point for the Fed when they meet next week in their big rate decision, which it's got a lot bigger now over the past couple of days. But the fact is, or the question is, what do they look at versus historical, what just happened versus what is happening now and what's happening in the future as far as where oil is going to take us? That's really the key question.
Eric Criscolo, market strategist right here at the New York Stock Exchange. My man, thanks for being here as always. It's good to have you.
Always a pleasure. Thank
you. All right, we'll see what PCE inflation data brings tomorrow. Skylar will take your mic. We'll talk with you again soon. We're bringing the latest analyst calls here on Wall Street this morning, and we will start with analysts from KeyBank reiterating Apple as sector weight. They are saying, at least for right now, iPhone sales appear to be seasonally low. Next up at this hour, Jefferies upgrading Petco stock to buy from a hold rating. They say the stock is somewhat underappreciated with liquidity as well as profitability concerns in the rear view mirror. And finally, Wells Fargo reiterating Micron, that is ticker symbol MU, as a buy, lifting its price target up to 270 ahead of Micron's quarterly results set to hit the tape next week. They are set to report on Wednesday. Time for a couple NYSE notables here. We'll start with CVS Health. Having a decent day up here on the board, up about 0.5%. This coming after analysts from Bernstein upgrading CVS to outperform, citing turnaround progress, modestly lifting the price target for CVS as well, up to $94 a share off this level at 76, upside potential of about 23%. And Bobby, let's swing over this way. We'll take a look here at Mosaic, having a very strong session. This is ticker symbol MOS, up about 7.5%, and this because fertilizer producer stocks in particular are surging as the conflict in the Middle East threatens supply here at home. This stock was down quite a bit after an earnings miss last month, but has rebounded pretty nicely since. Shares of the Mosaic company already up 26% here in 2026. Remy Blair, the lead anchor of FinTech TV, recently caught up with Rob Hadrick of Dragonfly to discuss prediction markets, the Clarity Act, and much more. Take a look.
Well, Bitcoin has rebounded off 2026 lows, but the broader digital asset market is still navigating a complex landscape. And after months of deleveraging, the space is stabilizing but remains constrained by macro forces, with liquidity expectations taking center stage in the absence of large derivative players. But beneath the surface, the industry is undergoing what some insiders may call a massive meta shift, while the focus is hurtling away from a rebellious Web3 utopia and straight towards toward Wall Street, replacing native app tokens with RWAs. Meanwhile, Dragonfly Capital recently closing a massive $650 million fourth fund. Well, joining me live at the New York Stock Exchange is Rob Haddock, General Partner at global crypto investment firm Dragonfly. Rob, great to have you here. Thank you so much for joining me again.
Thanks for having me.
Well, there are a lot of headlines and a lot of volatility across all asset classes. So I think a good place to start would be prediction markets. And I know over at Dragonfly, you have backed early winners, including Polymarket and Rain. So what do you make of what we're seeing in prediction markets right now?
Prediction markets, it's interesting because they've been around for a long time. They're not that new. We saw prediction markets take kind of center stage during the first 2020 election, the first election that President Trump lost, and then they really kind of accelerated into business markets and into global politics, and now into sports and other types of events as well over the last call it 15, 18 months. Now what we've seen is every single month, Polymarket, Kalshi, they're getting new all-time highs in terms of all-time interest, new all-time highs in terms of volume, and we're starting to see them take center stage for just being a source of truth across any different types of asset class or any different types of exposure that you might want, whether that's equity exposure in terms of will somebody beat or miss earnings, whether that's we're seeing quite a bit on the weather side with the large snowstorm that we had here on the East Coast a few months ago, and we started to see them really take center stage in terms of being a way for us to parse information and to understand how a broad set of derivatives and spot assets are trading. And so that's been really exciting, I think, and we see kind of a broad set of use cases, and I think that's what drove NYSE's investment into Polymarket to put $2 billion in back in September. So we're excited to see that continue to grow and for them to continue to professionalize in a way that will bring them to a much more broad audience.
And I think when we're looking at the digital asset space, there are many ways to look at this. First would be price action in terms of what's happening across crypto, but also regulatory progress as well as innovation. And you and I were here at the New York Stock Exchange. We continue to hear headlines about the exchanges and how they're getting involved with tokenization. But given what we're seeing in terms of price action, give us an understanding of the temperature right now.
So there's really two worlds in the crypto digital asset market right now. There's what you talked about, which is this institutionalization that's happening, right? There's the real world assets that are being tokenized on chain. I think there's about 26 billion of quote unquote real world assets on chain now. If you include like Broadridge and others who are doing things like repo on chain and sort of these kind of closed loop systems as well, there's over 260 billion of assets that are represented on chain today. NASDAQ obviously earlier this week, I believe it was, or maybe it was late last week, announced that they're going to do something with Kraken to allow for tokenized assets and to trade 24/7. And NYSE has also been talking about this as well with their investment into OKX. And so you start to see that there's this very clear tailwind behind just everything that's happening on the institutional side of crypto. At the same time, Bitcoin's been a little bit soft this year. They're trading much more in line with risk assets more broadly. And as you and I were talking about earlier, uncertainty is kind of the name of the game, and I think the risk asset market today. And then you have the long tail of crypto, which is where it's, I think, a little bit unclear how those tokens are, exposed to the outcome of the protocols, and if there's, if they can represent sort of, ownership or, dividends or buybacks, et cetera. And that's what we're seeing, kind of get debated in Washington right now with the Clarity Act. And so, speaking of Polymarket today has the a passage of a Clarity Act at 63%. Likely to happen this year. If that happens, I think we'll see it much more likely that these broad set of what we call alt tokens trade a lot better, because now it would be very clear that they can potentially have exposure to the outcomes of the applications that they represent.
Well, Rob, always great talking to you. Thank you so much for joining me here at the New York Stock Exchange, and thank you so much for sharing all of your insights as well as your perspective.
Thank you for having me.
Welcome back to the show. Tom Sosnoff joins us now down here on the trading floor of the New York Stock Exchange. He is the CEO and co-founder of Lost Dog, visiting us from the great city of Chicago. Nice to have you down here, my friend.
It's awesome to be back.
Talk to me first and foremost, what is Lost Dog for anyone a bit unfamiliar, and how have you taken your years of experience building platforms like Thinkorswim and Tasty Trade now to your work at Lost Dog?
I guess life is just a learning experience all the way through. Love building technology, and this is our latest venture.
And talk to me about what is it all about for Lost Dog?
It's a platform focused on optimizing your career value and your portfolio value. So what we're really trying to do is to give people a quantitative look at their career and a quantitative look at their portfolio.
So I find this fascinating. What is the core technology behind Lost Dog that turns a loss into a potential asset? What does that actually mean for a would-be investor?
Well, actually, that's not the name. That's not where the name came from.
Yeah.
But what it does is, what Lost Dog does for a potential investor is it shows people how to improve the basis of whatever their positions are. I don't care what stock you bought. We're on the New York Stock Exchange, any stock that you bought. How to improve basis. That means how to improve your cost basis. And it also shows people where your outlier risk is. And it uses agentic AI for all that, including portfolio building and everything like that. So it's just super cool new technology.
Yeah, speaking of super cool new technology, artificial intelligence is more and more at the fingertips of retail investors today. How is it changing the odds for retail investors? What is it doing? Is it an additional form of a benefit for investors?
Absolutely. I don't know that it's changing the odds. What it is doing is making everybody smarter. It's like having a buddy that has 160 or 165 IQ. That's what AI is. Your friend group just got better.
Yeah, your friend group just
got smarter.
But are there words of caution that you would give the retail investor, maybe for over-relying on some of this new technology?
Well,
listen, it's still prone to things like hallucinations, could give you bad information, might extract financial data that's a bit dated.
The upside so far outweighs the downside that I would say the only thing that I would be cautious about is AI is not going to tell you what the market's going to do next. It's not going to tell you if a stock's going to go higher, but it is going to make you so much smarter, and it's only going to benefit you.
What is your philosophy on wealth preservation during a so-called, you're probably sick of this word, stagflation threat? We go through these cycles where we talk a lot about stagflation, and then sometimes we don't. We're kind of back to a stagflation news cycle again.
I've been trading for 44 years, actively. I'm a junkie. And I would say that I've heard the word stagflation probably, 1,000 times.
Sure.
I still not really sure what it means for traders, but I will say that anything that comes up like newsworthy like that creates opportunity. It creates higher volatility, which creates more opportunity. Noise is good for traders. Noise is good for investors because it creates opportunity.
Before I let you go, what is one lesson of trading that you wish you had learned sooner in your trading career?
Remember two things. A, you don't really know anything, and B, stay small.
Tom Sosnoff, CEO and co-founder of Lost Dog. You really don't know anything and stay small. I love that. I might put that on a bumper sticker right here for the show. Thanks a lot for joining us.
Yours.
Really nice to have you.
Thanks so much.
Don't go anywhere. A lot more Taking Stock coming up right after this. Let's rock and roll. Welcome back to the broadcast. You are watching Taking Stock live from the trading floor of the New York Stock Exchange. Madison Chock and Evan Bates, Olympic gold medalists, join us down here under the podium at the big board. Welcome to the New York Stock Exchange. It's great to have both of you.
Thank you so much.
Good to be here.
I'm sure it's been an absolute whirlwind since coming off these last Olympic Games, but on top of all the other amazing experiences, can I ask you both what it's like to join us down here for closing bell at the big board?
It has been absolutely incredible. Such a dream come true to be a part of such a historic moment. We are big fans of the New York Stock Exchange, and to be here standing amongst all the excitement that takes place on the trading floor is really special.
Yeah, well, we're big fans of yours as well, so you're welcome back anytime. Talk to me kind of holistically, now you've had maybe a week or two to digest. None of us can ever imagine what it's like to compete as Olympians, but how did this last experience kind of match up with broader international competition that you both are so used to?
We brought our absolute A game to the Olympics in Milan. We couldn't have done anything more as far as how we performed, how we prepared, even the way we conducted ourselves off the ice. We were really proud of every facet of our experience, and representing Team USA is always the ultimate honor, and especially at an Olympic Games.
Yeah, that's awesome. So here's kind of a personal question for me. I know in your you call them routines. Mm-hmm. Pardon me, I'm not so. So just for you're far better athletes than I am. Bee Gees, Donna Summer, lots of Lenny Kravitz.
Yes.
I've always wondered when I watch these things at home, how do you go about choosing which musical artists you want to perform to?
That is honestly the most challenging part of the season, is picking music that you're going to skate to for the rest of the year, because you want something that really resonates, something that you love, something that the audience will enjoy. And we spend a lot of time and put a lot of thought into our music choice.
That's awesome. Talk to me about the Stars on Ice tour set to kick off in a few weeks. What can fans expect, especially for millions of fans who may have just been introduced to you for the first time and now might be really eager to see you with regards to what comes next after the Olympics?
It's the best place to come see the best skaters in the world. We've got every single member of the gold medal winning U.S. Olympic figure skating team, as well as many of the other skaters, all going to be on the cast. We're doing 29 shows across the U.S. starting in April. It's the biggest tour we've done in years, and we can't wait to see you guys there.
Dare I ask what rehearsals for things like that look like? I guess it's so much more difficult than any of us know.
Oh, the rehearsals are jammed packed. We usually do it over 3 days. We learn probably 4 to 6 group numbers, and then we practice our individual numbers where we have 2 solos. So it'll be busy, but it'll be fun because we'll be with our friends.
You said only 3 days?
Yeah.
To do that whole thing?
But really the rehearsal is a lifetime, because we've been working on our skills since we were kids, and even the program that we're going to be performing at Stars on Ice is the same program we performed in Milan. So you'll get a chance to see some competitive highlights right in your backyard.
How do you go about crafting the creative vision for something like this, the visuals and how it all comes together to build the ultimate fan experience?
That's a great question. Well, that is really up to our stage crew. They take the stage and they turn it into the show landscape, if you will. We'll have some probably fog machines, some curtains, some screens, so it'll be a really nice visual experience for the audience, as well as enhancing the performance that we have on the ice.
Amazing. Well, we're super grateful for the time for both of you. Before I let you go, what is your message to fans, either diehard fans of the sport who have been watching you play for years or compete for years, as well as for everyone who may have just been introduced to you recently in the last month for the first time?
We want to say thank you. We're so grateful for the support. There's no greater honor than representing our country on the Olympic stage, and we felt so loved and so supported, and your appreciation for what we do makes us feel really special.
And we hope to see you at Stars on Ice. Come say hi.
That's awesome. We look forward to being there. Madison, Evan, congratulations. Thanks for bringing the medals, by the way. It's awesome to have both of you come back and see us anytime.
Thank you.
Awesome. Don't go away. Much more Taking Stock live from the New York Stock Exchange coming up right after this. Let's do it. Welcome back to the show. Time now for a few fintech, crypto, and artificial intelligence headlines for your Thursday. It is Thursday, right? Yeah, for your Thursday afternoon. First up at this hour, Bitcoin is trading up fractionally. ETH is up 0.7%, while Solana is down 0.5%. Next up, the SEC and CFTC are signing a memorandum of understanding to coordinate on crypto policy aimed at creating a more consistent federal regulatory framework for digital assets and new crypto products. Finally, at this hour, Ripple launching a share buyback of up to $750 million, valuing the crypto payments company at about $50 billion, as it offers employees and early investors a chance to sell their stakes back directly to the company. And now Money 2020's very own Scarlett Sieber is back with a brand new edition you simply do not want to miss of Jargon Translator, putting complicated fintech terminology into language anyone can understand. Take a look.
Welcome back. I'm Scarlett Sieber from Money 2020, and this is Jargon Translator, where we explain why sometimes in finance, the scariest thing happens after the trade is done. You'd think once you hit trade, you're done. Spoiler alert, that's actually when the drama starts. So today's term is settlement risk. Settlement risk is a danger that one side of the transaction pays and the other side doesn't. It's a finance version of Venmoing someone for concert tickets and praying they actually send you the tickets. Those are a scary few moments there. In markets, millions of trades settle every day. Stocks, bonds, FX, derivatives. There's supposed to be an orderly process. I give you the asset, you give me the cash. But if something breaks, technology, timing, or a counterparty going dark, one party is left holding the bag. This gets especially spicy in foreign exchange, where trades settle in different time zones. One side might send their currency hours before the other side is even awake. Banks manage settlement risk with clearinghouses, collateral, netting agreements, and real-time settlement infrastructure. Because in finance, trust isn't a warm feeling, it's system architecture. Settlement risk. The reason back offices don't sleep and why "did the funds land" is the most stressful sentence in global finance. And that is your Jargon Translated. Have a term you want us to break down? Drop it in the comments below, and it might make the cut. Back over to you.
Let's do it. Welcome back to the broadcast. I'm not over just interviewing two amazing Olympians like that, and they brought their medals. How cool is that? All right, your final tail of the tape on this Thursday here on Wall Street. The S&P 500 selling off 1.5%. The Dow Jones Industrial Average also down 1.5%. The New York Stock Exchange Composite Index will sell off 1.6%, and the Russell 2000 down 2.1%. Gold and silver, speaking of Olympic medals, both down on the day. The oil benchmarks both up big. Comparable story for West Texas as well as for Brent, while the crypto majors mostly in mixed territory. Energy and utilities, those are your only sectors of the S&P 500 in positive territory. S&P sector losses to the downside today, led by industrials, tech, and discretionary. Pretty normal risk-off trade as we head into tomorrow morning's PCE inflation print. That's the big driver of market momentum. We get those numbers from the government at 8:30 a.m., 1 hour before the opening auction here on Wall Street. And then, of course, this all sets the stage for next week's FOMC meeting from the Fed Tuesday and the press conference on Wednesday. That's going to do it for this Thursday edition of Taking Stock. Thanks for watching. We'll see you again tomorrow.